We are now going to learn how to write the story of our business using accounting language. And we do this using journal entries. So in previous videos, we talked about how to do debits and credits, what the left side means or the debit side, what the credit side means, and how that increases and decreases certain accounts. So we still have to go through, analyze the transaction, figure out which accounts are going up and down, and then we decide what are debits and what are credits in the transaction. So we're going to take that knowledge now and write a journal entry. So for example, let's say the owner contributed $10,000 to the business. We've analyzed this one. We said, okay, that means cash is going up. Cash is an asset. It's a debit. So if I was looking over here at my T account, I'd see cash, and I'm like, okay, I know it's going up by 10,000. Up for an asset means I need to debit or put it on the left side. And the other half of the transaction, we said, okay, if I have a debit, I have to have a credit somewhere. And that sounds like capital. So the owner's putting something into the business. Since it involves the owner, it must be the capital account. So capital, we said that's owner's equity. The owner now has more of the business or has more invested in the business, and that means we need to credit that side. Okay. So these are T accounts, and they just help us visualize the left side and the right side of a transaction. How we actually write this in accounting is we write a journal entry. And we're going to do that by figuring out which are the debits. And we're going to write those first. In this case, cash is our debit, so we'll write it first. We'll put cash, and then we'll leave a little bit of a space, and we'll put the amount that cash, in this case, is debited. And we know that a debit to cash means it's going up. And then we'll look for all of our credits in the transaction, whatever they happen to be. In this case, we have a credit to capital of 10,000. To show that it's a credit, we are going to indent it a little bit. So we'll write capital. And we will leave a space here, but you see that since it's indented a little bit, the number here for cash is on the left side, the number for capital is on the right side. Again, the left side is debit and the right side is credit. So our debits are all the way to the left and our credits are indented somewhat to the right. All right, so we look at this. This is essentially a sentence in accounting. It tells us the story of what happened. And we can have several of these journal entries in a row. So for example, the next one is we bought supplies on account and it was $1,500. On account means that we still owe the money. So in this case, we were like, okay, what are the two accounts? One is supplies. Supplies is an asset. It's going up, so I have to debit supplies. Debits go first, so I will put supplies here. Supplies went up $1,500, so I debit that. And then accounts payable is a liability. We owe more than we did before, so liabilities are going up. That must mean we need to credit the liability. So I abbreviated A/P, 1,500. Okay, we have another sentence in our story of our business. So once you become familiar with accounting, you can actually read the story by just looking at the transactions. And let's do one more here. Let's say that we paid off part of that $1,500. Let's say we paid off 500 of it. So we say, all right, well, what's happening? Our cash is going down. We gave up $500 in cash. I look at this. Cash is an asset. To make cash go down, I must have to credit that. So that can't go first because we always have to put the debits first for a reason I'll explain in a little bit. So we say, well, cash has to be credited. So let's put that down here. I'm going to skip a line because I need to put my debit first. But that's the first one that I figured out was cash needs to be credited 500. Well, what else is happening? We owe less money than we did before. That sounds like a liability. We owe less money, so we need to debit the liability to show that it is going down. And that is accounts payable. And so we debit accounts payable. Added another sentence to our business story. So again, once you get very fluent in the accounting language, you'll be able to read these journal entries and construct the transaction that happened. All right, so you can have thousands and thousands and thousands of these journal entries, and you can read the story of what's happening in the business. Now, that's a problem if you want to find a specific thing that has happened. For example, if I had a big book of the history of Minnesota, and I wanted to find everywhere that it mentioned the Glensheen Mansion. Well, one thing is I could read the entire book. And that's essentially what we're doing here. What if we wanted to find out everything that happened with accounts payable and like how much do we owe people, and we wanted to figure that out? We could read the entire book and find every place where it mentions accounts payable. Now, there could be thousands of things that don't have anything to do with accounts payable. So, I mean, that's an option. You can just go read every single entire journal entry. Just like you could read the entire history of Minnesota to find every place it talks about Glensheen. However, what you probably would do if you were specifically looking for the Glensheen Mansion is you'd flip to the back of the book and look at the index, where it tells you every single page where it mentions the Glensheen Mansion. And that's what we do in accounting as well. So, whenever we make a journal entry, we have to post it to the ledger. I think ledgers are kind of like our index. And so we are going to have one index entry for each account. And we can have this in a couple of different formats. The format that we often use in class is the T account for our ledger. So I'm going to draw a T account here, and I'll do that for cash. And I have another one for capital. So you can imagine each of these is like an index entry. Not only is it going to tell me what page it is on, or where to find the details of the transaction, it's going to tell me how much it is. So cash, if I'm doing this one, I'm saying, okay, cash is being debited $10,000. So I'll write it over here. Capital is being credited $10,000. So whenever I make a journal entry, I need to make sure I post it to the ledger. That makes things very easy to find and add up and just work with. Now, we could say that this is journal entry number 1, this is journal entry number 2, that is journal entry number 3. And so you'll often see a notation in the ledger saying, where can I find more information? Because if I'm looking at the cash entry, it doesn't tell me why I got that $10,000. So if I want to find out why I got the $10,000, it'll say, well, go look at journal entry number 1. And so then I can go back, find journal entry number 1, and see the entire story of what happened there. Kind of like, again, the history of Minnesota. You look at the index for Glensheen, it just tells you the page number. It doesn't tell you the story behind what happened there, but you can look at the page number and then go back and see the entire story. Same thing in accounting here when we're looking at our ledgers. All right, so we are going to have, I have to add 2 more here just to finish things up. My supplies and my accounts payable. So my second journal entry, I said supplies, debit $1,500. So I have to write it in not only in the journal entry, but also in the ledger. Accounts payable, I credited $1,500. And then those are journal entry number 2. And then my third one, I said accounts payable is being debited $500 and cash is being credited $500. And that was journal entry number 3. So if I wanted to find out everything that happened with accounts payable, I would go to my ledger or my index and see, oh, it went up 1,500, went down 500. I don't know why. If I wanted to know why, I can follow then the references to the journal entries. So I'd say, okay, well, I don't know why it went up 1,500. I go to journal entry number 2, see the whole story. I don't know why it went down 500. If I want to know why, I go to journal entry number 3, and it tells me, again, the entire story there. All right. The other thing that ledgers do is it tells me in total how much I have. So for cash, I have 2 entries. It went up 10,000, went down 500, which means I have a debit balance, in this case, of 9,500. My total overall balance is 9,500 debit. I have more debits than I have credits, therefore my balance is going to be a debit. Same thing with accounts payable. I had 1,500 credit, 500 debit. I have more credits than debits. How much do I have? I have 1,000. So the debits and the credits offset each other, and so I just write down how much more do I have than the other one and put it on the correct side. That is what is called the balance in the account. So I have a balance of $1,000 in the accounts payable on the credit side, and I have a debit balance in the cash of 9,500. All right, so that is how we translate all of the transactions we've been doing to our accounting language. We're writing the story with our journal entries, and then we are putting it in our index in the ledgers. It's the same information, just in 2 different formats. And depending on what you're looking for, you might go look at the journal entries, or you might just go look at the ledgers. We are going to be using both formats in everything that we do. So just get in the habit of whenever you write a journal entry, you must post it to the ledger to keep things up to date and so you don't miss anything.